Cooper coming to you with the Daily Market Report, coming to you on Wednesday morning, February 6th, just before the open. And in this video, I'm going to show you how to create a trend channel to predict turning points in the market and to determine what Jesse Livermore called the line of least resistance. Legendary trader W.D. Gann said, if you know your 0 point, your starting point, you can determine and measure anything. And if you can't measure risk, you can't manage risk. So it's important to know how to measure the market. Like everything in life, you have to know what the starting point was to understand where the path is headed. You have to understand where you started to know where you're going. Let's take a look at a weekly Dow right here to determine if we're truly at a turning point by using the concept of trend channels. As Gann often stated also, time and price balance out or square out and become one and the same at turning points. In this weekly Dow, shown here, the bottoming process from the first quarter correction in 2018, right here, ended in late June. Although it didn't make a lower low here, this is where all this consolidation and backing and filling and shop ended. How do we know that? Because this is where a persistent advance followed. Even this little breakout here did not make a new high over this, but this is the low from which a new high, a new swing high, and ultimately an actual new all-time high was struck. So this is where we determine our 0 point, because this is the low, the trough, from which a persistent rally to a new swing high, an all-time high occurred. Likewise, the December low was a significant low. I connected these 2 points with this trend line. Early October was the all-time high, so obviously another important anchor or 0 point right here. That's the early October high. I then paralleled a line from the October high off the bottom trend line, creating this parallel channel. The Dow struck the top right here of that channel yesterday, Tuesday, February 5th. Now, while many market participants may have anticipated a test of the 200-day, which ties to the 50-week, and that's this blue line here. This is a weekly chart, so this blue line is the 50-week moving average, which ties to the 200-day moving average. So while many market participants may have anticipated that a test of the 200-day, a first test, an initial first test, would have rejected the Dow, the index had a date with destiny in kissing the upper trend line, the upper trend channel. So scale-up shorts have been squeezed. At the same time, sold-out bulls are chasing, creating a pivotal dynamic in this region. At the same time, we are near at the anniversary of the waterfall low, 360 degrees or 1 year ago from early last February. This is the time also to look for a possible change in trend. So we're in the time region and the price region for a turning point. At the same time, the Dow is stretched. It hasn't inhaled since the low. What do I mean by that? I mean it hasn't traded below a prior week's low since the December low. You can see there's no trade here below a prior week's low. That's unusual. Even in this persistent advance, you had a turn down in the weeklies, which defined a low. Turn down in the weekly defined a low. The weekly swing chart is stretched and should turn down sooner rather than later. The behavior on that turn down will give us a lot of information about the line of least resistance. The normal expectation if the market is going higher immediately would be for no more than a 1 to 2 week pullback, 1 to 2 weekly lower lows, consecutive weekly lower lows against the underlying prevailing interim uptrend. So that puts early March in the crosshairs, and of course that's the Gann decennial cycle, March 2009, early March 2009 was the low of the bear market. So 10-year anniversary for that will be important, and it's going to be interesting to see if the market extends, squeezing scale up shorts further and necessitating bulls to chase, or we'll get a pullback low or something even more into that time frame. In other words, more than just a normal pullback, but a sharp shakeout, which could see as much as a 50% retrace of this whole rally. That's it for now. I'll let you go. Good luck trading. See you next time.